And greetings to you, value investors, day traders, long-term traders, hype dorks. Across the fruited plain, inflation is transitory. That's all I know. Okay, I figured it out. I finally figured out what Jerome Powell meant about transitory. Let me turn the mic down. I finally figured it out. What he meant by transitory is that inflation is transitory around 2%. He didn't mean that we were going to stabilize at 2%. He meant it was transitory around 2%, and then it's going to go higher from there. I figured it out. I got it. All right. So let's do it. Let's do some stuff. There's a lot of buzzing around your mic. I don't know how to fix this. Hold on a second. Let me turn it down. There. Let me know if that works. Is that better? I'm not a tech guy here. Mo doesn't have that Rogan mic. Joe Rogan does have sick mics. All right. Alrighty. Consumer pricing index rose to 5.4% year over year, and it's still buzzing. Seth, tell me how to fix my mic. They say it's buzzing, and we might need Corsair microphones. Seth, tell me how to fix the mic, and I will. Right now, it's just this mic is very disruptive. That's all I know. This mic is as disruptive as that person said hydrogen gas cars were going to be, or something, whatever he was saying. All right, I'm going to talk, and Seth will tell me what to do, and then we'll go from there. Anyways, the consumer price index rose 5.4% year over year in September. versus the 5.3 estimate. So inflation is up. Pretty much every story I have out here today is going to deal with supply issues and gasoline price issues and this issue and that issue. So, and then I have a really good story about quits that are happening in the restaurant industry, and it's truly, truly crazy. Anyways, let's start getting to some stuff. Where do I want to start here? Oh, well, let's start with the taper. So the taper is everything was based on what was going to happen today with that number. Inflation is up marginally compared to what it was. Of course, I mean, relative to what it should be, it's probably a lot higher than it's supposed to be. But anyways, the latest reading on the U.S. Consumer Pricing Index Wednesday is unlikely to have a major influence on the Fed's decision on starting to phase out its emergency bond buying program in November. Remember, they say that in November it's going to happen. I don't know. I mean, when I think they start trimming and tapering, I think it's going to be very, very, very small amounts that are going to cause panic, but I don't foresee this being gone by the middle of next year. The annual rate should remain stable, about 5.3% is what they expected. It actually did tick up. That wouldn't reflect major acceleration in inflation, but instead it would confirm that it is proving to be stickier than anticipated earlier this year. And what I mean by that is they're saying it's not transitory. The most recent data about the state of the U.S. labor market might have been the reason that the pandemic time, in pre-pandemic times for the Fed to wait further before giving a single monetary policy tightening, with only 194,000 jobs created instead of the expected 500,000. That would be a poor situation in the jobs market. Of course, we're seeing that. Guys, things are getting bad. You know it. We talk about it here every day, and you're smart human beings. So what should they do? Be patient or aggressive? Policymakers are split. Some people say tighten it, and then you have a couple of Fed presidents out there saying, let's start raising the interest rates to negate inflation. Of course, that would cause a total disaster in the market. But let's see here. They're divided of how much to do. Some indication of the intensity of the debate should emerge on Wednesday as the Federal Reserve releases its minutes of its September 21st through 22nd policy meeting. So that's going to come out today, probably around 2 o'clock. I'm not sure, but probably around 2 o'clock. With the economy set to grow at its fastest pace in decades. Okay. How do people say this with a straight face? The economy is set to grow at its fastest this year at its fastest pace in decades. Have you looked and seen what's going on out there? How are you supposed to grow? Apple's coming in and saying they're gonna make 10 million iPhones less. Supply issues are crazy. There's a freaking picture. Where was that picture here? Did I have it here? Damn, I don't know if it's in this story. Shoot. There was a story that I was looking at. Is it here? No. There's a story that I was looking at that basically had pictures of ships sitting out in the middle of the water, and the current administration, they're saying that they're going to keep those ship ports open in California 24/7 until all of them can get delivered because they're just sitting there. You have supply chain issues. Nobody's going to work. Jobs are not being created. Wages are going up. Yeah, because you're trying to incentivize people to stay there. How are you going to say that you have the economy growing at the fastest this year at the fastest pace in decades? These people are outside their damn minds. Jerome Powell said last month, as long as the job market data is decent, whatever that means, it probably means the same thing as transitory to him, he expects that the wind down of the Fed's purchase of treasuries and mortgage-backed securities to start next month, meaning November, and be completed by the middle of next year. Fed Vice Chair Richard Clarida said on Tuesday that he said the unemployment guide was all but met. So let's see what you guys are saying about this. Cash is king. That is true. You need a blue Yeti. Yep. The Fed is supposed to keep a blind eye to the market. The Fed, just-in-time finance, that's why the Fed was created, is to be a separate entity away from the government. But they have become, in some cases, when it comes to the economy, more powerful than the government because literally everything hedges on what that man is going to say. It blows my mind. It literally blows my mind. Let's talk about housing. So it's interesting when you start looking at housing bubbles that are being created in the world. The U.S. is not up there in the top 10. Frankfurt, Toronto, Hong Kong, Munich, Zurich, Vancouver, Stockholm, Paris, and Amsterdam. Those are the top cities that are balling right now. Frankfurt topping the list. European cities account for 6 of 9 of the most imbalanced housing markets, according to UBS Group. On average, bubble risk has increased during the last year and has the potential of severity of a price correction in many cities tracked by this index. Worsening affordability, unsustained mortgage lending, and the rising divergence between price and rents have historically served as a forerunner for housing crisis. Unlike 2008, U.S. cities are out of the danger zone, except for like California. Yeah. Except for Cal. What did somebody say about Peter Schiff? Peter Schiff was talking about this 6 months ago. Yeah, Peter Schiff is a very bright guy. Very bright guy. All right. Will you guys just relax here for a second? Hold on. Halftime intermission. Pause. Back. All right. Let me know how that is. All right. Next. Talk about the banks. So the banks are halftime show. Now, let me do Apple first. Let me stick to what we were talking about, and then I'll hit it. All right. So Apple shares declined, and iPhone production is expect. Apple shares declined. Apple's supposed to be producing 10 million less phones in 2021 because of the chip shortages that are going on. Broadcom and Texas Instruments are having trouble delivering the components, and yeah, that's it. Inflation tricked up 10-year. Yeah, we know. All right, next. So just more and more. Bank of America, guidance could be ugly. So here's the good thing. It's not a good thing. Here's the trick that they're playing. These big banks and these companies are going to come out, and just like they did before COVID, and they're going to start giving negative forward guidance before they report their earnings. They're going to kind of soften the blow and then report their earnings so that you're expecting a little bit of softening, shall we say. Investors are turning their focus on this week make or break quarter for company earnings, according to Bank of America research. Guidance could be ugly. Analysts warn we believe that 2022 earnings per share will be revised lower. Several companies have recently issued negative pre-announcements. It's a way to tame the public, mostly concentrated in consumer materials, industrials, and supply chain issues. Supply chains, of course, is the limelight. Wages are the limelight. China issues, soaring commodity prices also pose risk. And that is that. By the way, Seth, I did not touch my mic, so I have no clue. It wasn't user error. The computer's on the fritz, I guess. JPMorgan exceeds profit expectations of $1.5 billion, boost from better than expected loan losses. All right. They came in with $3.74 earnings per share against $3. And you guys, I remember yesterday I said I wanted to see what the banks were going to come in and report. I want to see what their credit reserves were going to be. I want to see what their loans were. I want to see what their fixed incomes were. I want to see how their equities tradings were going, and JPMorgan crushed it. So they came in with a revenue over estimates. They released credit reserves of $2.1 billion as economic outlook continues to improve, I guess. Fixed income revenue dropped 20%, but equities made up for that loss, producing $2.6 billion, beating the $2.16 billion. They did a lot of mergers. The firm posted a 50% increase in investment banking fees to $3.28 billion. A lot of these IPO stuff. So, yeah, it's crazy. It is crazy. All right. So that is, last one. Walmart, or not Walmart. Restaurants. This is a good story. Tim sent me this one this morning. So staffing issues are ramping up. The stress is, so this is at restaurants. Look at this sign. Burger King, we all quit. Sorry for the inconvenience. Peace out, I guess. Frontline service industry really don't get much love from consumers and customers, and everybody's kind of stressed out. That stress is helping fuel a record level of quits in the hospitality industry, in which an unprecedented 892,000 workers walked away from their jobs in August. 892,000. The magnitude of that number is partly explained by the fact that accommodation and food services is a big sector that generally employs a lot of people, and the sector also leads to more quits than anybody else because that is a very ebbing and flowing industry. I do not know what ebbing means, though. Another food service manager, Christine Garrett, told Insider that she had hired 13 people this year to staff just one position at the cafe she runs in Gettysburg Battlefield in Pennsylvania. Of those 13 hires, 8 either quit without notice or never showed up for their first day. Both Garrett and Long said that they'd raise wages, increase bonuses, increase incentives, and guys, they can tell me all they want to tell me. In another survey, 58% of restaurant and hotel employees said they plan to quit their jobs by the end of the year. They can tell us all they want to tell us about how we're going to be on a good trajectory this year. I'm not buying it. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, and at Seth Kirchanan. And that's it. What do you guys got to say here? Debt ceilings are ridiculous. You know, Jamie Dimon made an interesting point. He said, if we're going to keep doing this over and over and over, why don't we just get rid of the debt ceiling? Makes a valid point. I mean, they don't follow it anyway. Who gives a, I almost swore. Smash the like button for me. That would be great. Ebb means the water is flowing out. Thank you. Thank you. Chip shortages equal shipping. Yeah, that's correct. All right. Let's get to some stuff here. I'll do some of your stocks that you guys are talking about, but first I want to see what the markets are doing. I actually didn't even check them this morning. To me, what this says is we're going to get more stimulus or more. Well, the stimulus is going to stay. The stimulus hasn't changed. The 10-year yield is ticked under 1.6%, so that's positive, whatever way you want to look at it. Delta reported this morning. They're down. I know a lot of these airlines are going to have a lot of difficulties when it comes to fuel prices. So JPMorgan reported, BlackRock reported this morning. Seems like everybody did pretty good. Well, I don't know what they reported, but it looks like it's coming out pretty good. Tomorrow's a big day for banks. Bank of America, Wells Fargo, Citigroup, Morgan Stanley, U.S. Bank Corp. So pay attention to that. And then Friday, Goldman Sachs, Charles Schwab, and PNC. If you want to join our software, $28 a month. Guys, I can't believe it's already mid-October. This is crazy. $28 a month gets you into our software, be a part of the community, 8-pillar software, stock analyzer tool, real estate calculator coming soon, momentum trading will be coming soon. If you want to join the Bid and Ask Nation with me, daily updates, daily content, I'm in there pretty much. Well, I am in there every day, but giving you all inklings into my very, very busy life. Just kidding. But $78 a month gets you that. If you're interested in trading what we're going to do next, you can go ahead and jump in there for that. $500 a month if you want to join Paul's Super Shorts. Paul and I went to dinner last night. We were discussing how we can better improve Paul's Super Shorts, and we came up with some pretty good ideas. So, and if you want to do a one-on-one Zoom session with me, I actually have the next 3 Wednesdays I have scheduled for one-on-one Zoom calls. So these are great. These are so much fun. If you want to do it, if you're novice trader or you're an experienced trader and you want to work out the kinks, jump in there, 1-hour Zoom call with me. And if you want to do a real estate deal with Paul, $10,000 for 4 hours of his time. If you're doing a deal in this market with, and especially if it's your first one and expensive, it's probably good to hit up somebody like that. What do we got? I work in the pharmaceutical industry. I work in the pharmacy industry. As a planner, the supply chain issue is overall disruption of the most raw material have led to long back orders. Supply chain is all messed up. Yeah, the supply chain's totally screwed. We're not getting back to anything normal until 2023, in my opinion. All right, let's see what we got here. So this is Boeing. This person just kept typing BA, so I went with, because I don't want to talk about BABA, I went with Boeing. So if you wanted BABA, sorry. If you wanted Boeing, lucky you. So here's your high, here's your low, and here's that 50% area right down the middle, and you are sitting right at it. And what the 50% rule is, you have all of this negative pressure pushing down on the stock because these people that lost all this money just want to make half their money back. They make it back, the stock price falls. Make it back again, stock price falls. They didn't get back in these two, move up again. This is where I sold. Move out, and it just and it's just a negative. This is a very, very, very strong resistance line that's sitting right on top of you, and you need a ton of volume and a ton of good news to get that going. So, weed bad, IDK bud. That was pretty funny, but no, I don't do marijuana stocks. Let's see here. Dun, dun, dun. Lockheed Martin. Nah, I don't want to do Lockheed Martin. Lockheed Martin's part of the employed trader. Roblox. This is the weirdest thing I've ever seen, this Roblox stuff. I will tell you, I mean, it's very strange to me, all of this Roblox. Oh, they went public on March 10th. So here's the issue. Whoever asked me this question. I don't have a year of data. And I like to have a year of data because the 1 year of data gives me a story about the stock. It gives me the entire book. Right now, I probably have a little more than half the book done. So I need more. Like, I don't even have a 200-day moving average here. I have a 100-day moving average, and that 100-day moving average just became 100 in August. So to me, if I'm you, I wouldn't do anything over on either of these charts. I'd go trade this on a 15-minute chart if you are so inclined to do so. But other than that, you can go play it on your iPad and have fun with that. I had Nicole's nephew show me how to play that game, and I was sitting there pretending I was enjoying it, but I thought it was very weird. I don't understand how these children are just obsessed with these blockhead-looking people that play a bunch of different stuff. I don't know, man. Back in my day, we had normal baseball and football games, and then we had Grand Theft Auto where you just go and shoot everybody. So I don't know what was wrong with that. Anyways, I digress. Facebook is holding at some kind of support level here. Again, you touched your 200-day moving average yesterday, I'm noticing, and you bounced right off it. So you can see, let me zoom in even more. You guys can see how powerful these moving averages are. Dip right down to the 200, boom, fly back up. So I would be careful with this one. I wouldn't bet on Facebook dropping below its 200-day moving average anytime soon. My son is obsessed. Yeah, I just don't get it. Drop down to your 200-day moving average. I don't know, guys. If this thing turns back like this, if we can come down here and get this weekly stochastic to turn back up, then I could say go ahead and go long on Facebook. But I am telling you, I just don't think that it's a good idea to go long-term chart here and short a FANG stock. I just don't think that's a very good idea right now. You're fighting against a lot of people. Back in my day, we used to throw stones at each other. Touche. Roblox has its own crypto. Just what we need. Indoctrinating kids with fake money. I just triggered so many hype dorks. All right. Here's your high. Here's your low. I'm going to draw a 50% line in the middle. So this is Coca-Cola. So they've done a good job. And the fact that they consolidated here and then moved up, came down, and didn't drop below this 50% line, moved up, came down, hit 50% and moved back up. This tells me that they're probably going to get through that 50% area. They just need to continue to have good volume coming in. So pay attention down here to this weekly stochastic. Let it move up. Let it get into the sweet spot. And make sure you're getting good volume when that happens. I do like Coke right now. I think it's a good play for you. You take real money and you turn it into fake money. Yeah, that's crypto. Run. Okay, run. Is this a hype stock? Sunrun? When was this? Oh, maybe. I don't know. Whatever. Anyways, you're struggling to get through your 100-day moving average right here. So that is a tough thing for you. Now, the good thing is you closed above it and you're going to open above it. So make sure today that you hold above the 100-day moving average. Don't let this thing fall back down in this area, because if it does, you're in some trouble. But everything looks like it's coming in. You're having good increasing volume the last 2 days. Good looking stochastic. Your weekly is about to turn up. So, yeah. Coke can definitely help with the charts. Yes, it can. I snort cocaine every single morning before I do this. I'm just kidding. GNTX. What do we got here? Oh boy. Let's see here. You know what I'm doing here. I'm pulling up a line chart. Oh boy. Okay. So this is your perfect looking flagpole. So we've just, you started out nicely. You kind of started to create a W and then you just went straight into a flagpole. So this is flagpole city. This thing is going to come back down. I guarantee it's going to come back down to 34. It'll probably come back below 30 down to 33. It'll probably come back down to the 100-day moving average. So if you're in this, good job. Take profits. Let's see what the candles are looking like up top. Are we getting any pullbacks? So we're not getting, okay, this is interesting. So we're not getting any pullback. So just pay attention to it. If you start getting candles that look like this and start having these wicks on the top, that's when you know the run is over, especially if you start getting wicks and your volume starts deteriorating. That's when you're going to have to, pay attention there. But this is good. Just make sure you're taking profits because I'm telling you guys, this is going to come back down to the mid 30s, low 30s. Got in a little late. Hey, what's up? PP. Smash the like button so you would do. Oh, Mark, you forgot to tell me to do that one. I'll do Callaway before AT&T because he asked me earlier. Although I will tell you, Mark, I just got some new TaylorMade golf clubs and I got rid of my Callaway ones. I will never get Callaway again. I think those things are such poor quality golf clubs, from driver to woods to irons. I just couldn't stand them. I hit a ball and the face of my rescue club dented. It wasn't even cold outside. There was no rock on the ball. There was nothing. It just dented. Now, granted, they immediately shipped me out a new one, even though it was out of warranty, free of charge. But still, like, what the hell? I've never seen that before. All right. So you're holding a very big support level here. The fact that you're at a support level coupled with you're at the bottom of your stochastic tells me that this thing is more likely than not going to turn up sometime soon. And I bet you'll get some kind of run up to about $32. Now, you're going to face some resistance here. If you just draw a line straight across, it's 1, 2, a little bit of consolidation in this range and this range, and then you have this line on top. So that is going to be a tough part for you, but even over here, you're below all 4 major moving averages. You have not hit average volume for about 3 weeks of trading sessions. This is a tough one, man. I'd move on. Their stock is as good as their golf clubs right now. What do you prefer, Chrome Soft or TaylorMade? TaylorMade. I do have custom golf clubs. Why would you play golf without custom golf clubs? That's like taking a game that's incredibly hard and then making it 1,000 times harder. If you just go and pick up some golf clubs and start playing, I don't know why you would do that to yourself, unless you are some kind of masochist that just enjoys torture. So you're at a resistance point on MGM, and you had a big day yesterday. I don't know what the reason was, but it was up 10%. So if I'm you, I'm taking profits today. I'm considering myself lucky and selling some off because I do foresee this pulling back because we're very high on our stochastic here. You could get a couple more days based on this middle line, but you know what? I'm a little bit more conservative. I would go ahead and take some profits there and just move from there. Used balls are the best. Doc, oh, I forgot to do AT&T. Ever tried disc golf? No, I don't like that. I don't like throwing frisbees. I think it's weird. This is, what is happening with this? Holy. Give me a second. I'm just trying to zoom in. Okay, so this is a dog stock that just keeps, this is like a dying dog at this point. If you get another engulfing candlestick down, I think you can, I think you would be fine to short it, but make sure you're using stops because who knows when this thing can turn back up. Just as easy as they had bad news, they can have good news and come right back up here. My goodness. I think they're at their lowest level since 2010 now. My chart doesn't go back that far. Well, yeah, this company sucks. These guys are jokers. I think they're going to get better in the future, but geez. T fell apart after the X dividend. Shouldn't they have not fallen apart because they cut their dividend? So they were not handing out as much cash? Next, IMO. In my opinion, Imperial Oil. Wait, I have it saved in my phone when I type in IMO, it just goes to in my opinion. All right. So you're at a resistance point. Let's see, because this is an oil, so I want to see if we're getting any line chart pullback. Yeah, this is great. So what I'm liking about the oils is they're running up and then they're doing a pullback and then they're going and they're pulling back again. So you want these pullbacks. Pullbacks are a good thing because they create these W formations moving up. And that is exactly what we're seeing with oil. Let's just start ripping through oil right now while we're at it. Let's see. Let's go BP. See, beautiful. I'm looking at the weekly. Beautiful looking chart. Let's do Chevron, CVX. Again, great looking W formations. Let's do RDS, Royal Dutch. Not the best, but not the worst. Let's do ConocoPhillips. Is it, what is it? Phillips 66. What is that one? COD? No. COP? Yeah. Good looking W's. Yeah, this is great, guys. This is great. Oh, thank you. T didn't cut the dividend. They will do it after the merger. Thank you. Thank you. Okay. I wasn't sure about that one. I know everybody spazzed out about it back like 3 months ago. NUE. What do we got for Nucor? Nucor Corp. So they're just consolidating a little bit, just under their 100-day moving average. Volume is certainly declining. You know what, man? If I'm you, I'm not playing with this thing right now. Maybe go at it from a day trading chart, but guys, smash the like button. That would be wonderful. AT&T is a boomer stock. When the checks quit coming, boomers moved out of the stock. You are 100% correct. I know a person that did that. He got so spazzed about it that, and he's in his 70s, and he's like, they cut their dividend. I'm like, okay, sounds good. They're still paying one of the best dividends on Wall Street, but sounds good. All right, this thing, Vici Properties, could move into the sweet spot relatively soon. You have the 200-day holding you back, then you got the 100 above it. So that is going to be a tough one for you. HRL. Is this like TRL's sister station? Oh, Hormel. Never mind. Let's see here. This is looking pretty good. Net Ghost. Looking pretty good. But you got to be patient. You got to let this thing move up, get into the sweet spot. It's going to take some time. It's going to take volume. I think the market's open. The market just opened. But yeah, you just got to get going. You need volume. Eventually you will get into the sweet spot. I promise you. It's just a matter of time. Just a matter of time. All right, guys, I will do one more. Only checked out a few of these live streams, but it's been great interaction, top notch. We'll definitely be joining the Patreon for less than a cup of coffee. Thank you, Mark. That's awesome. I'm glad to have you here. And the fact that you like golf, I like that too. Walmart. Nah, I don't want to do Walmart. Give me another one. Thanks for doing oil, learning something from it. RDS. Yeah, RDS is something because it's not the best looking W formations that are happening right now in the oil sector, but it's still looking like it's okay. Give me another one. Give me another one. Does the U.S. drop balloons every single day on the market opens? I know they clap for pressing a button. Yeah, they drop balloons full of cash. Balloons full of cash on your head. Intel. What do we got with Intel? Oh, boy. So Intel is just really consolidating very, very hard. You are just stuck in a range, and you ain't getting out of that range. And the reason is because every time you bump up to the 100-day moving average, you fall right back down because you get volume, and then it falls off. And you get volume, and then it becomes selling volume. And then you get volume, and it falls off and really becomes selling volume. So this is going to be a tough one, guys. Intel, you're rolling over on your weekly. Not a good long-term trade. It is going to be a tough go. It's going to be a tough go. And when tech gets hit, you're going to get hit. And Intel will get hit. So there's going to be a better time for Intel, trust me, and we'll go from there. I'll do one more. I want to do Tesla since I'm actually happy with Tesla lately. They have not changed the delivery date of my car for like 2 straight weeks. Congrats, guys. You're maybe getting things together, but I highly doubt it. I have a question for is that person still in here that was talking about the hydrogen? If you're in the comments, please come in here. I heard a rumor, could be true, could be false, that Tesla is likely to go out of business when hydrogen cars come around because hydrogen cars are going to be more disruptive than EV cars. So, by the way, I'm just joking for those of you that are invested in Tesla and have your net worth in there. you should be okay. So I would foresee Tesla turning down before it turns up. Its volume is just so inconsistent. It's just so inconsistent. That's the problem. You're getting up into all-time highs. It consolidated here in this 850 range for a while. You know, guys, I don't know. I'd stay away from Tesla for right now. I go and day trade it, but all right. That's it for today. I will see you guys back here tomorrow morning, 9 o'clock. You'll be fine, Warren. Hydrogen is bad science. I bought AT&T this morning. Off topic, what kind of guitar do you play? I play a Takamine and a Taylor, and I love both of them. But I love my Takamine more. And I got the Takamine because Garth Brooks plays it. So I thought that I would be as good as Garth Brooks after I picked it up for the first time. Turns out I wasn't. Turns out it doesn't work that way. But, you know. Have a great day, guys. See ya.
Thank you.